Apple relaunches its phones, watches, and AirPods with enhanced AI features as part of its effort to end sliding sales. Bank stock surge as Commonwealth Bank hits another record, and investors are set for a $35 billion dividend bonanza over the next 8 weeks. Welcome to Fear and Greed Daily Business News. For people who make their own decisions, it is Wednesday, the 11th of September 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Now, I have a challenge for you today.
Oh dear, go on.
One of my all-time favourite words is in the show. I think you'll pick it immediately. There has been some criticism that you haven't been listening closely enough to me. I think one of our regular listeners came in yesterday and said I was talking about shareholders being fed up at Domino's, and you made no response to that.
Completely missed it.
Yep, completely missed it. But one of my all-time favourite words is in today's episode. I hope you pick it up.
Oh, I will be listening like a hawk. I don't know whether...
Good.
I don't know whether hawks have good hearing. You know what? Let's move on.
Listening like a dog.
Let's move on from that, Sean, and get straight onto the main story this morning. Apple has released new watches, iPhones, and AirPods in its biggest product launch in years, with Chief Executive Tim Cook claiming the company is introducing breakthrough technologies in the devices. That's a big call.
It is. The devices are equipped with new artificial intelligence features known as Apple Intelligence, which Mr. Cook says will enhance creativity, accessibility, and health awareness. The launch of Apple Intelligence will take time to roll out. It won't actually be launched in Australian English until December, though the new devices go on sale in a little over a week. The new iPhone 16 range includes a new faster chip and will perform AI tasks, including writing tools and information gathering services via photos. The Apple Pro models will include a larger screen as well as sharper microphones, and all the new phones will have a bigger battery and upgrades to cameras. In fact, some of the changes to cameras are quite remarkable. The watches have larger screens, are thinner, and include faster charging times. But the main upgrade really with the watches are around health features, including this incredible feature which can detect whether wearers have sleep apnea over a 30-day period. When it comes to the AirPods, one of Apple's big selling points yesterday was that the Pro series can act as a hearing aid device. So overall, these new devices, AI is a big part of it, but also the push into health is another big part of it.
Apple is just such a big company, and when it makes an announcement like this, it is such big news. But when it kind of all comes down to it, Sean, the question for most of us is how much all of these AI-enhanced devices are actually going to cost.
Yes, well, surprisingly, some devices, notably the phones, are cheaper than the last version. In US dollars, the iPhone 16 starts at $13.99, with the Pro models beginning at $17.99. The Apple Watch Series 10 starts at $649 US dollars, of course. So the watch is the same as the previous version. The AirPod prices haven't increased either. The Apple prices have actually come down. $50 for the Pro Series, $100 for the iPhone 16. The launch really matters to Apple. It's the world's largest company, and we know that, worth $3.4 trillion US dollars. iPhones bring in more than 50% of the company's revenue. So the iPhone division, if it was on its own, would be the 15th biggest revenue earner on the S&P 500. That's bigger than Ford, bigger than General Motors, just the phone division. But the last full financial year, turnover was down more than 2%. The last quarter, it was off about 1%. Apple hopes the launch of the AI product will boost its flagship products and reverse sluggish sales. One of the big pushes at the launch yesterday, occurred in California, yesterday morning Australian time, included up to $800 in the US when you trade in an iPhone 12 or newer model. Now, according to the Australian, consumers can get up to $1,125 credit if they trade in an iPhone 15 Pro Max here in Australia. Now, if they have an 8-year-old iPhone 7 Plus, they can get $65 credit. Anyway, the whole idea is that trade-ins will actually offset the cost of a new phone or a new pair of AirPods or a new watch. Having said all that, of course, none of the prices are higher. In fact, the phones are actually cheaper than the previous versions.
I've done that before, the trade-in.
Have you?
When
I've never done it.
When I upgraded from my last iPhone to my current iPhone, I thought, you know what? They offer this. I'm going to give it a crack. And obviously we're not advertising Apple or anything here, but I figured that it was better then just disappearing into my drawer.
Yeah.
Because phones just have this ability of just kind of congregating in the back of your bedside drawer.
So how much did you get?
Oh, it was about maybe $500.
Oh, really?
Yeah,
Oh,
because
wow.
it was probably about a 3-year-old phone.
Yeah, right.
And so I got about $500, and it actually kind of brought down the cost of the new phone fairly substantially. And considering I was probably just going to kind of keep it as a backup phone, I thought, well, you know what, it's better money in my pocket than kind of a dead phone in a drawer.
See, last time I bought a new iPhone, which is probably 3 or 4 years ago, I was going through the period teenage kids, they were breaking theirs all the time. So the one I was replacing just went to one of the kids. Though now, as the kids are a bit older, I can probably get some money for my current model.
Yeah. Suddenly there's a bit of competition for these phones. They've actually become quite the commodity in the trade-in market. Anyway, Sean, it's a fascinating story. And after the show, you've got an interview coming up with Stephen Fennick, the editor of techguide.com.au, who knows this stuff so well.
He said he got up at 2:30 a.m. yesterday morning to listen to the announcement out of Cupertino in California, and he gives us the whole, the box and dice, ball and, I don't know.
It's the box and dice. After me listening like a hawk early on, though, you do not want to trust anything I say on sayings.
Yeah. Okay, the whole box and dice on the new watch, the phone, and the AirPods. And I mean, he goes into some of the detail about the medical options on some of these devices. Just quite astounding.
Yeah, it's a big event in the tech world, and it's a big event in the business world, as you pointed out, Sean, just because of the flow-on effects and the importance of this launch for Apple. So big story. Local markets. Let's have a look back home. What happened yesterday?
S&P ASX 200 closed up 0.3% to finish just over 8,000 points. The banks just keep giving. Commonwealth Bank yesterday hit a new record high of $145.24 a share. Macquarie Group hit a new record also of $228.50 a share, while Westpac, National Australia Bank and ANZ are trading above or at 7-year highs. It came after UBS analysts suggested investors choose banks over miners, arguing that even at these elevated prices, the big banks are likely to do better than the resource companies. Also affecting the banks, the regulator, the Australian Prudential Regulation Authority, announced plans to phase out bank hybrid securities. They've been around for quite a few years now. Basically, APRA wants the banks to replace them with cheaper and more reliable forms of capital. Away from the banks, energy and telcos did best yesterday, while materials companies performed worst. Taking a look at the non-bank large caps, WiseTech Global and QBE Insurance were two of the best performers. Fortescue Metals Group was the worst.
I'm going to have to ask you about a piece of jargon there that I am not particularly familiar with. Bank hybrid securities. What does this mean?
Yes. Difficult to explain. Basically, when you sit in the capital structure, capital structure is going to be hard to explain too. When there's equity at one end, there's bonds at the other, and if a bank fails, the bond holders get paid out before the equity holders get paid out. In fact, the equity holders don't tend to get paid out. In between bonds and equities, this is oversimplifying it, there's all sorts of other instruments that debt instruments that banks use to raise money. One of those are these hybrids, which actually start as one form, might be a bond, and convert to equity. So there's all sorts of bells and whistles on these sorts of things, but the gist of it is that they're certainly not as safe as bonds, but more safe than equity. Now, the banks hold these in reserve so that if something goes wrong, they can liquidate these hybrids and use it to pay for things that where things are going wrong. The regulator thinks they're not quite safe enough, so they don't want them to issue hybrids anymore. A long answer to a short question, which I don't know whether I answered, but there you go.
I think you did, but my favourite part of that was when you started explaining it and you saw the look on my face and you actually said, you know what, I'm going to have to simplify this even further. Let's move on. International markets, what's happening there?
Well, the Aussie dollar isn't having much fun at the moment. It's trading around 66.5 US cents, hit by fears of an economic slowdown and disappointing economic data out of China. Oil prices have edged up again on the back of Hurricane Francine, shutting down some drilling operations in Texas. Still, it is trading close to 3-year lows. Gold's buying $2,500 an ounce, and there was a jump in iron ore prices yesterday. It's kind of ironic, but the idea there is that because the numbers in China are so bad, people are now hopeful that Beijing will provide some stimulus for that economy. Therefore, that's good for iron ore.
That makes sense.
Figure that.
Quick mention, Sean, of the fact that today is Wednesday, which means it's newsletter day. The Fear and Greed free weekly newsletter only comes out once a week. That's why it's a weekly newsletter. And it is Wednesday, and it comes out mid-morning on Wednesday. If you haven't signed up already, you can head along to fearandgreed.com.au and just pop your email address in, and you will get the newsletter when it comes out mid-morning. Any hints as to what you'll be kind of delving into, giving us your views on, your unadulterated opinions?
A fair bit about stocks and Commonwealth Bank and places like that today.
Ooh, very exciting.
Most exciting.
Yeah, there's incentive in itself to go and sign up. I'm still listening out for the word, by the way. You haven't said it yet, have you?
I haven't.
Okay, all right. I shall keep waiting. We'll be back in a moment with the rest of the day's business news. Sean, the Albanese government is seeking the support of all states and territories to impose a nationwide ban on teenagers using social media.
Prime Minister Anthony Albanese said he will introduce new laws before the next election, saying parents are working without a map to try and tackle the mental health consequences triggered by social media. It comes after South Australian Premier Peter Malinauskas proposed to ban children under 14 from accessing platforms such as Instagram. Now, the federal plan is vaguer, with the cutoff age somewhere between 13 and 16. The final decision will be made by the states, territories and federal government together. The federal government has already initiated research into using age assurance technologies and has begun consulting parents, young people, academics and digital platforms about how the ban could work. The next phase involves testing so-called age assurance technologies. These are technologies aimed to prevent access to pornography by children under the age of 18 and age limit access to social media platforms for teenagers between 13 and 16 years old. Some of the premiers have come on board. Victoria's Jacinta Allen was one yesterday, still a ways to go, but the wheels are in motion on this one.
Yeah, feels like progress. Consumer sentiment, Sean, has fallen on the back of fears about the economic outlook and the jobs market.
The Westpac Melbourne Institute Index of Consumer Sentiment fell 0.5%, meaning pessimism has now been the dominant emotion for the past 2 years. And Westpac senior economist Matthew Hassan says there's little sign of the glumness lifting. Consumers are less worried about interest rates rising and believe the cost of living crisis has eased somewhat. They do fear where the economy is heading, though, and what that means for employment. The survey also shows home buyer sentiment improved slightly, and house price expectations have cooled in Victoria and New South Wales.
Is it glumness?
Yes. Well done. Well picked.
Oh, I don't think I've ever heard you refer to glumness before. Usually you're calling us a miserable bunch whenever you're talking about consumer sentiment. So I love the fact that you varied it with glumness today.
But isn't glum one of the truly great words? Just 4 letters, sounds what it means.
Yeah, it is just dripping in meaning, isn't it? It's just like I'm feeling glum. Yep.
Yeah.
And it's impossible to say with a smile on your face.
No, and there's no way you can be positive when you say glum.
I've never heard of glumness, though.
Well, that might be a made-up word, but, you know.
Yeah, it feels like it should be glumnity or something like that. Anyway.
Thanks for picking that up. Well
I'm listening very closely. The news isn't any better either, Sean, in the business sector, with both sentiment and conditions tumbling according to the monthly NAB survey.
The business sector has been the bright side of the economy, but now, as National Australia Bank Chief Economist Alan Oster says, conditions, which measures jobs, sales and profitability, are now fairly clearly below average compared to the history of the survey. Business confidence has now fallen to negative levels, meaning businesses are pessimistic, not optimistic. There's also a strong drop in the employment gauge, suggesting the post-COVID boom period for the labour market is over.
Federal Treasurer Jim Chalmers will consider negotiating with the Greens to push through changes to the Reserve Bank after the coalition rejected reforms around the proposed new interest rate setting board.
We talked about this yesterday. It's even more so today. The country's central bank is becoming a political football, and that just doesn't help good economic policy making. Yesterday morning, the Shadow Treasurer Angus Taylor said the coalition will oppose plans to split the 9-person Reserve Bank board into separate committees for interest rate setting and for governance, unless the 6 external board members, the current guys, make it onto the 9-member interest rate setting board. not much room to move when 6 is going into 9 and not many places left over. The original proposal at least, came from an independent review of the bank last year, and Mr. Taylor said he'd open the way for an interest rate setting board to be politicised. In fact, what he actually said, and I quote him, it would leave open the option for a stitch-up of the Reserve Bank board. With legislation needed to pass Parliament, Dr. Chalmers said the coalition's decision was irresponsible and disappointing, and now he's going to consider negotiating with the Greens. For their part, the Greens have made it clear that it wants any new legislation to retain the Treasurer's veto power over the Reserve Bank, a power that's there now but has never been used in the 64-year history of the central bank. At the end of the day, the thing about this, which I find frustrating, I'm not sure whether splitting the board into an interest rate setting board and a governance board is a good idea or not. But right now, all that debate is about point scoring, political point scoring, rather than deciding what the best policy is. I find that very frustrating because there are some institutions that Peter Costello made it independent. It should just remain independent, and both sides of politics should just work out the best outcome. I don't know. I'm frustrated by it.
You're sounding quite idealistic there, Sean.
Yeah, true. As I was saying it, I'm thinking, really? No.
You're talking about bipartisan cooperation here, and it feels like that might be beyond us right now.
Yeah, perhaps. Yeah.
Golly. Investors, I mentioned this one at the top of the show. Investors are at the beginning of a dividend bonanza, which is another great word, isn't it?
Yeah.
With $35 billion in payouts due to hit shareholders' accounts from now up until October.
Payout ratios are up 5% on a year ago, and if you include all the big four banks, because remember, 3 of them, National Australia Bank, Westpac and ANZ, had end March balance dates, but if you throw those into the mix, the ratio is up 7%. In short, the major miners cut dividends after a boom prior year, while financials, banks and insurers, paid out more to shareholders, according to an analysis from CommSec. BHP will pay the biggest total dividend, $5.54 billion, even though it cut its payout by 10%. Next biggest is Commonwealth Bank, which will pay out $4.2 billion in dividends. But dividend yields of banks, which measure the payout against the share prices, have fallen. That's given the run in bank stocks. Now, bank dividend yields traditionally are among the highest in the market, but not anymore because of those share prices.
There's plenty going on at News Corp at the moment. Hedge fund Starboard Value has filed a shareholder resolution to eliminate the dual-class share structure that allows Rupert Murdoch to control the company.
Really interesting. Starboard says there are no reasonable arguments to extend super voting rights and de facto control to the inheritors of a founder, according to a report in Reuters. Now, currently, under the shareholding structure, the 93-year-old Mr. Murdoch owns an equity stake of 14% of News Corp, but has 40% of the company's voting stock. So they're saying once he moves on, whatever that means, why should the people who are inheriting his 14% still get 40% of the company's voting stock? There's also a legal battle going on between Mr. Murdoch and his eldest son Lachlan on one side and the 3 other children on the other over ongoing control of the Murdoch family trust. In that one, Mr. Murdoch wants Lachlan to run the company when he dies rather than any of the other kids. The other kids are perhaps less conservative than Lachlan. Rupert Murdoch, Mr. Murdoch, wants News Corp's conservative political position to be maintained. So that's another court battle going on.
Turning to international news now, Sean, a big day today. The US presidential debate kicks off at 11 a.m. Eastern Standard Time. It'll take 90 minutes, including 2 ad breaks, and it's going to be a very different proposition to the first debate.
Yes, Donald Trump trounced Joe Biden in the first debate, so much so that the current president pulled out of the race. Kamala Harris is known as a confident debater, but given she is an unknown quantity to many Americans, her performance today is critical in maintaining the support base she's garnered since late July 21, when she entered. The debate will be hosted by America's ABC network. There'll be no opening statements, no audience. Each participant will be given 2 minutes to answer each question, 2 minutes for rebuttals. They can each make a 2-minute closing statement. Neither are allowed any pre-written notes. They will get a pen, paper, and a bottle of water. Very generous. They can't confer with advisors during ad breaks. And this is the thing reported by CNN, which I found incredible. The two have never met.
Oh, wow.
Apparently they were in the same room at the State of the Union, but they've actually never met, which really blew me away.
And the State of the Union's a big event. There's hundreds and hundreds of people there. So
Parliament sitting.
I am amazed by that.
In fact, I find it hard to believe, but that's what CNN is saying. They've never actually met. Well, can you imagine the first, they come in and...
Yeah, and just some of the things that have been said in the past, like when he's questioned kind of whether she is now identifying as a person of colour differently and just things like that. How would you address those things when you meet for the first time?
Oh, I don't know. I mean, I suppose it's all politics, but it must be very awkward.
Oh, very, very uncomfortable. But you know what it'll be? It'll be fascinating viewing.
Great for us to watch.
Oh, we shall be watching indeed. Now, last one, Sean, this is kind of alarming. A study of adolescent brain development that tested children before and after the COVID-19 pandemic lockdowns in the US found that girls' brains aged far faster than expected, something the researchers attributed to social isolation.
Yes, you started this by saying it's alarming. So I don't know that it is alarming, as the researchers point out. The study comes from the University of Washington. It measured cortical thinning, a process that starts in either late childhood or early adolescence, as the brain begins to prune redundant synapses and shrink its outer layer. Thinning of the cortex is not necessarily bad. Some scientists frame the process as the brain rewiring itself as it matures, increasing its efficiency. But the process is known to accelerate in stressful conditions, and accelerated thinning is correlated with depression and anxiety. According to a report in the New York Times, scans taken in 2021 after shutdowns began to lift showed that boys and girls had experienced rapid cortical thinning during the period, but the effect was far more notable in girls, whose thinning had accelerated on average by 4.2 years ahead of what was expected. In boys, it was 1.4 years. The study's author attributed the change to social deprivation caused by the pandemic, which hit adolescent girls harder because they're more dependent on a social interaction, talking through problems with friends, as a way to release stress. It's not quite clear that it's that it's alarming in that this is a process that happens anyway, but certainly it is correlated with depression and anxiety.
Yeah, I think it probably is a little bit alarming that it was accelerated so much just because of isolation. That because of an unnatural state for us to be in, we are not meant to be kind of solitary, isolated creatures, that because of that, it caused the brain to accelerate in its aging. I find that fascinating and frankly, a little alarming.
Yes, I think you're right. I don't want to be alarmist, but yes, you're right. It is alarming.
I don't think I've ever shied away from being alarmist, Sean. So I jump straight for the headline. All right, up next is the Fear and Greed Daily Interview. Your guest today, Stephen Fennick from techguide.com.au.
All about Apple's launch of new devices yesterday, watches, AirPods, phones, all those things that you like. And I mean, Stephen knows all about it. Some phenomenal information he has about the changes and how they'll affect our everyday lives.
Yeah, it is a cracker. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is where you sign up for the free weekly newsletter, which is due out in a few hours. So jump onto that quickly now so that you get this week's edition. Thanks very much, Sean.
Thank you, Michael.
It is Wednesday, the 11th of September, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.